Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today we have Nick Giambruno. Nick is Doug Casey's globe-trotting companion and is the senior editor of Casey Research's International Man. He writes about economics, offshore banking, second passports, surviving a financial collapse, foreign trusts and companies, geopolitics, and value investing in crisis markets, among other topics. He's also the senior analyst of the Crisis Investing publication. He's lived in Europe, worked in the Middle East, including Beirut and Dubai, where he covered regional banks and other companies for an investment house. Nick is a CFA charter holder and holds a bachelor's degree in finance summa cum laude. He's a frequent speaker at investment conferences around the world. Welcome, Nick.
Oh, great to be back with you, Richard.
Great. I thought today we'd do a focus on a number of interesting topics that are in the news and public highlight, including what's happening with the pension crisis in the U.S., trends on the war on cash, basically with an overall theme of central banks and governments intervening in the economy and in the financial market. So maybe we could begin with your thoughts on the war on cash. Where do you see that trending? Do you see governments getting into cryptocurrencies to move away from cash?
Well, let's start by looking at, yes, the war on cash. And not to mince words, the war on cash is evil. It's all about restricting people's choices and forcing them into digital systems that can track, monitor, and control every penny you earn, save, borrow, and spend. It's really a totalitarian type control system, and there's no redeeming values of it whatsoever in terms of benefits that are worth the trade-off of basically losing your absolute financial privacy. So first things first, it's just an awful thing, but nonetheless, it is a growing trend, and it's not naturally very popular in academia and with governments, because it's all about transferring governments more power and more control over people. So that's uniformly a bad thing, but nonetheless, it's a growing trend. Not just in the United States, but around the world. Your listeners might remember back decades ago, the United States, well, now the largest bill is a $100 bill, but there used to be $500 bills, $1,000 bill, and even a $10,000 bill. Those were all gotten rid of in the 1960s and 1970s, with the usual excuse of, it's only used by drug dealers, terrorists, money launderers, and that sort of thing. So the largest bill that we've had since then has been the $100 bill, but the purchasing power of the $100 bill has gone down drastically since the 1960s and the 1970s. So the inflation is an important component of the war on cash, because if the governments don't issue larger denominations of bills to keep up with inflation, it has the de facto effect of forcing more people to use cards and digital payments than they otherwise would, because it's just not convenient to use cash because the large value bill has been inflated away. And I see the same sort of demonization that governments and the media and their academic cohorts have used in other areas, like I just mentioned, those very large denomination U.S. dollar bills back in the 1960s and 70s. I see the same kind of demonization and language being used by the same type of people towards private cryptocurrencies, and that is a scary thing, because it shows that they are gunning for this. And it's important to distinguish between a private cryptocurrency and a cryptocurrency controlled by the government. There is nothing, in my opinion, I think it's a wonderful thing, these private cryptocurrencies, because the ultimate power and control of these systems is not with the state or any government. It's it's distributed and decentralized. So that's why we see governments talking about, oh, it's only used by terrorists, drug dealers, money launderers. That's why we see people who are, intimately involved in the current system, banking and central banking system, which is, as you're fully aware, a fraudulent system, like Jamie Dimon coming out and saying it's a fraud, Bitcoin is a fraud. These are signs that they are gearing up towards an assault on this. But I don't, we can go into the reasons why, but I think it's going to be extremely difficult for them to crack down on private. I think the cat's out of the bag on this, on these private blockchain and cryptocurrencies. But nonetheless, all of these issues are very much intertwined.
Do you think that governments will allow the private-based cryptocurrencies to coexist? I know you said sort of out of the bag and sort of uncontrolled, but maybe in the future, if governments try to control or regulate, do you see the possibility or allowance by governments for private-based cryptocurrencies?
Well, honestly, I don't think they have a choice. They can try to control it and regulate it, but I don't think they're going to have much more success than, say, Venezuela does in trying to control, currencies that they don't like, which
Yes.
would be U.S. dollar and other currencies. So I think the U.S. government is not going to have a whole heck of a lot more success than, say, Venezuela does or any other government does in regulating currencies that they don't like their people to use, which in itself is a terrible thing. I mean, why should some bureaucrat tell you what kind of currency you would want to use voluntarily? It's really a terrible thing. Anyways, let's say they do try to crack down on this. I think also another thing to point to, a similar technology is BitTorrent. Now, BitTorrent is a decentralized file sharing technology that allows people to share any kind of file they want, whether it's a Hollywood movie that just came out in the theaters, an ebook, anything. You can share anything. Anyways, this technology has been around for over 15 years, and the U.S. government has tried, despite its best efforts to shut down BitTorrent, it's so decentralized. So when it's like a game of whack-a-mole. And despite their best efforts, it still is easily accessible to anybody on the internet. So Bitcoin is similarly decentralized, is maybe even more decentralized. So sure, they can say, okay, Bitcoin is illegal and you can't convert your dollars into Bitcoins. It'll just, shut down these exchanges. But, it's not like Bitcoin is going to die or it's going to be impossible for you to get Bitcoins. It might be a little harder. So I think it's basically impossible for the U.S. government, the Chinese government, any government to totally eliminate these private cryptocurrencies, other than just shutting off the internet and keeping it shut off, quite frankly.
Yeah, some great points. On central banks, do you see central banks as sort of being favorable to a war on cash to make it easier for bank bail-ins? For central banks to implement their policy, for example, like negative interest rate policies, that type of thing?
Oh, certainly. I mean, the central banks are all on board and on the same wavelength of the folks who are advocating for the abolition of cash. So the central banks are fully on board for this. And I think one of the main reasons behind the war on cash is because central banks want to use negative interest rates, which is a bizarre thing in the first place when you actually think about it. It's like getting paid to borrow money. It makes absolutely no sense. And it wouldn't happen in a free market. A negative interest rates basically couldn't exist in a free market. They only can exist in a manipulated and controlled market, such as the system that we have with central banks and fiat money. But the thing is they want negative interest rate. They want to implement negative interest rates because of their wrong-headed belief that somehow that will force people, instead of losing money from the sting of negative interest rates, we better go out and spend it quickly before we lose money from it, and that'll somehow stimulate the economy. It's completely wrong-headed in the sense that, if people need to, it will encourage people to save more money because it'll be harder for people to save money to spend on their basic necessities. That's not going to spur people to spend more. It's going to spur people to actually save more because they're going to have less money available to spend on rent, food, and so forth. It's not going to make them go out and buy the iPhone 8 or the next ridiculous fad as they would like them to. Anyways, the whole point of the war on cash is to force people into the banking system because cash represents an escape hatch for people who want to avoid negative interest rates. It's no coincidence that in countries that have the worst cases of negative interest rates, you see people hoard. I don't like to use the word hoarding but they are saving more in cash. Look at Japan. Japan has had record sales of safes that people would install in their house to store cash because Japan has negative interest rates,
Yes.
and people don't want to lose money from negative interest rates. So it's a completely wrong-headed and destructive policy, again, that has no redeeming values whatsoever, that could not exist in a free market where there are voluntary interactions between buyers and sellers in a voluntary market. It can only happen via coercion in a government-controlled financial system.
And do you consider cryptocurrencies to be stores of value or investments? And like, will Bitcoin, for example, retain its current valuation, or will it come down a little bit towards what it costs to produce a Bitcoin in terms of electricity and computers? I think it's around $1,000 now. What are your thoughts on that?
Yes, I think it's the real value in cryptocurrencies. In my opinion, it has been yet to be established that these are reliable stores of value for anything other than the very, very, very short term. Nonetheless, they are extremely valuable as transfer mechanisms to move value from point A to point B. Instantly. I mean, you don't have to keep it in the cryptocurrency. You can convert it to other things, goods and services, fiat money, cash, or gold, whatever you want. But in terms of moving it from point A to point B, I think they have a tremendous amount of value. But as a store of value, I think that it's going to take some time to establish that. Personally, I favor gold and silver as long-term stores of value. But the cryptocurrencies, which is really, really, really interesting, is that you don't need anybody's permission to send money to anybody anywhere in the world, and it doesn't need to be backlogged by the bank and have the compliance department and check it out to make sure it's fine. It doesn't need the approval of SWIFT. It doesn't need the approval of the U.S. government. You can simply send cryptocurrencies to anybody anywhere in the world, and there's pretty much nothing anybody can do about it, and that's a really wonderful thing.
Great points. And I guess going on that theme of movement internationally of capital, what are your thoughts on globalism? You've written a lot about that, the end of globalism on the economy. Will that lead to protectionism or more local free-based markets?
Well, I think the jury is still out on that, but I think it's important to also define our terms because these terms are thrown around a lot, and I think it's important that we have a common definition of these terms so we know what we're talking about. Globalism, in my view, is simply the centralization of power on a global basis. That's it. I mean, when you look at that's all it means, is that you look at the people who advocate for these things in centralized global power structures. That is globalism. Now, whether globalism has reached its zenith and is now declining and is going to, I think there's a good chance it is. And the European Union is a perfect example of globalism because it's centralization of power of all these nation states into one global, one giant supranational institution. So it's we're talking about all about the centralization of power. And it's interesting because cryptocurrencies and gold tend to go in the opposite direction. They tend to decentralize power. And I'm 100% for decentralization. Decentralization, as far as I'm concerned, is always a good thing. And centralization is generally always a bad thing. So what we're looking at here is what is going to happen if and when globalism and the ideology behind globalism, which is basically universally subscribed to by the elites in the academic, the political, the financial, the media elites in the U.S. and the greater Western world. So this is, in my view, it's a bankrupt philosophy, and I think it's sort of akin to communism, in terms of this is a bankrupt ideology that's going to be relegated to the dustbin of history sooner or later. So what is going to replace that? And I think that is an open question. Are we going to move towards a more decentralized, voluntary society? I would like that to happen. Or are we going to move towards more of nationalism and protectionism, which is just replacing global centralization of power on a global basis for more of this tribalism and nationalistic feelings, which isn't necessarily a good thing either. So I think the jury is still out on that, whether we're going to move towards more of a nationalistic, protectionist type of a world, or we're going to move towards more of a more voluntary, decentralized type world. I think the jury is still out on that.
Okay. And you've written a lot also recently on the U.S. pension crisis. John Malden has pointed out he thinks it's the bubble in government promises is arguably the biggest bubble in human history. He gives an estimate of $2 trillion, but says that that's based on an average 7% compound return of the $2 trillion of unfunded pension liabilities, that is, for state and local governments on the pension crisis. But assuming the market could go down 40%, then you have unfunded liability in the range of 7 to 8 trillion. So it's enormous. What are your thoughts on the U.S. pension crisis?
Well, this is a perfect example of the extreme corruption in the U.S. and the extreme corruption in government, the financial markets. It's a total mess, and quite frankly, the pension crisis is an unsolvable problem. There's nothing that can be done to solve this problem. It's simply too big. And the issue at hand here is that the government, these local governments, municipalities, state governments, all over the place, they're making promises, extravagant promises on retirement benefits that they simply can't deliver on. That gets them the support of their, government employees and unions, police officer unions and teachers unions and these kinds of things. But they're really promising these people, their own employees, benefits that they can't deliver on. And what's interesting is that pensions, it's a pretty nice benefit. I mean, think about it. You basically get your pretty close to, or your last year's salary adjusted for inflation until you die. And that's a pretty nice benefit. Certainly better, pensions don't really exist in the private market anymore. About only 4% of U.S. private companies offer pensions anymore, just because it's not possible for them to do. But for a government, they can promise these extravagant things and then use, and then another thing is the accounting method of pensions. Governments get to use different accounting standards than private pensions do. And the single most important number in the whole pension space, in the whole pension crisis, is the assumed rate of return on the assets of the pension, because that assumed rate of return is used to discount the liabilities, the future liabilities of the pension. So if they use an artificially high assumed rate of return, their liabilities are magically shrunk. So these pensions are assuming that they're going to earn more money, earn a better return in the stock market than Warren Buffett into perpetuity, which is ridiculous.
Yeah.
And so they're not using anything towards realistic assumptions in their accounting. They're using Bernie Madoff accounting. It's a fraud. And if they were in the private sector, they'd be going to jail for fraud. But nonetheless, they're in the government sector, and magically what is fraud in the private sector magically becomes acceptable when it's in the public sector, which is totally unreasonable. But be that as it may, what they've done is they've promised these extravagant retirement benefits to their employees. And now the tipping point is really we're really close to the tipping point, because these pension plans they're basically bankrupt, and that's at the time of a stock market bubble and a bond market bubble of historic proportions. That should pump up the value of these, and it has pumped up the value of these pension plans. But nonetheless, they're still paying out all this money and benefits that even with an enormous stock and bond market bubble, these things are still insolvent. And even with using unrealistic return to discount the future liabilities, they're still insolvent. So the next time the market has any sort of minor recession or downturn, a lot of these pension plans are going to go bust. And what does that mean? That means the taxpayers in these states are going to be on the hook to pay for these, what I think they're extravagant benefits, and they're benefits that aren't, people in the private sector don't get these benefits. So they're extravagant benefits. And how are they going to pay for them when, the whole thing's gone bust? Well, they're going to increase taxes. And what taxes are they going to increase first? Property taxes. And we've seen this in Illinois. Recently, property taxes are going through the roof in Illinois. Illinois is hardly the only place that has a pension problem. Many, many, many jurisdictions do. If your town or your state or your municipality or your city has a pension problem, the likelihood of your property taxes doubling, tripling, or even going higher is very likely. And it's not just in the U.S. Really, any jurisdiction that gets into financial problems always turns to higher taxes and property taxes. I mean, Greece is a perfect example. Greece, I think property taxes have gone up 4 or 5-fold in recent years as they've looked to squeeze people for every penny that they can get out of it. So really, to me, this is an illustrative example of just how rotten the political system is, how rotten the financial system is, and it's all wrapped up into one nice crisis. So this thing is going to come to a head sooner than later, certainly in the next cyclical recession, which we are way overdue for in the U.S.
Yeah, and the same thing here in Ontario, up in Canada. The debt per capita is multiple times worse than in Greece, so it's only a matter of time. But we already see the property taxes going up, and use fees, for example, licenses, just across the board going up here and there.
Yeah, I know it's frustrating, and really, I think we should take a step back too and think about property taxes and property rights, because how can you say that you own something and that you are the owner of a piece of property that you have to pay a never-ending and ever-increasing annual fee on? It's ridiculous. If you had to pay property taxes on your sofa or your TV, could you really say you owned your sofa or your TV, or you were merely renting it from whoever was charging you that fee? I think it's the same thing, and I think property taxes are a terrible thing, and hopefully, I'm not holding my breath, but hopefully they're done away with at some point in the future, but unlikely. They're probably going up.
And also, you've written on the pension crisis. You have suggested 2 investment asset classes that investors could consider: gold-related and cannabis-related investments. Can you elaborate on that rationale?
Sure. Okay, so let's start with gold. I think the pension crisis is going to be terrific for gold because, as I mentioned, this is an unsolvable problem in the traditional sense. These state and local governments, they could double, triple, even quadruple taxes, and it's not going to make a dent in this problem. So, and that's assuming that the tax revenue that they receive after increasing taxes would stay, the collection rate would stay the same, or it wouldn't, though, because higher taxes are going to drive people away from these states. And we've seen this already in Illinois and Chicago in particular. I think 3,000 millionaires have left Chicago because of higher taxes in recent months. And there was a study done that this is like one of the single largest outflows of wealthy people in the entire world, not just in the U.S., not just in North America, but in the entire world. So I think it takes, you got to take a step back when you see all of these productive people, these wealthy people fleeing this city, that, there's an issue here. So certainly there's a point of diminishing returns that comes with raising taxes that I think it's already been reached in a lot of these places. So they can't raise taxes, and they can't cut benefits either, because a lot of these benefits are enshrined in the state constitutions that they can't cut these benefits, these pension benefits. Isn't that a nice thing? I mean, you got the government to basically say that they're going to guarantee these benefits, and it's enshrined. It's against the state constitutions to renegotiate or lower these benefits. So it already is bankrupting these places, causing a local debt crisis. So I mean, they're going to default on these obligations one way or another. But ultimately, what's going to happen is the federal government is not going to just sit back and let all of these states and cities not make good on their promises to their own employees. It's just politically going to be impossible for the U.S. federal government to step back and do nothing. That's the whole point of having the central bank. They're the quote-unquote lender of last resort, which really sanitizes what they really do. They print money and give it to people, so they basically socialize the costs of these things through money printing and higher prices and inflation. So that's what's going to ultimately happen, is that the federal government and the Federal Reserve is going to step in and paper over this pension crisis by printing money. That's the bottom line of what is going to happen eventually with this pension crisis. And that's going to be good for gold. So that's the rationale behind gold, because simply there is no other way to solve the pension crisis besides the printing press. So that's what's ultimately going to happen. Number two, these states are so desperate for every penny that they can get. They're going to start looking for alternative means of revenue. And I think they're going to look at these states that have recently legalized cannabis, and they're going to find that opportunity too good to pass up. There's hundreds of millions of dollars being flowed in with new tax revenue from the legalization of cannabis in various states. Colorado, I think it's estimated next year, when California goes live with legal recreational cannabis, that they could bring in about $1 billion in cannabis-related tax revenues. Nonetheless, this is not going to solve the pension crisis. A couple billion here, a couple billion there. It's not going to solve a multi-trillion-dollar issue. And I know you cited that earlier, that it was a $2 trillion problem, but that's using the unrealistically rosy rate of return assumption of like a 7%, which is what most 7%. Public pensions. But if you use a realistic discount rate, we're looking at a $5 trillion plus program plus problem. So a couple of billion here, a couple of billion there from legalizing cannabis is not going to solve this problem. But nonetheless, because these states are so desperate, it's not going to hurt the cannabis situation. They're going to look at these. They're going to look to get every penny that they can get in cannabis. I think is going to be a beneficiary of their desperation. So that's the rationale for the second investment.
Yeah, very interesting. In addition to cannabis, what controls monetary policies, fiscal policies, government regulations do you see coming in the near future that governments and central banks will employ to deal with increasing burden of government debt and unsustainable, spending and deficits?
Well, I think we talked about those a little bit earlier, Richard. I think we're definitely going to be seeing negative interest rates spread, because negative interest rates, of course, benefits the borrower. And who are the biggest borrowers in the world? Are governments, and they're the largest borrowers, the U.S. government in particular. So I think we're going to see, I think we already have negative interest rates in the United States, not negative nominal interest rates, but certainly negative real interest rates when you consider the nominal interest rate and the rate of inflation. Sure, they give you this phony CPI number that says, oh, it's like 1 point something percent. It's much larger than that. Everybody knows that. Just go to the grocery store and look at how much your groceries cost, your medical insurance, your kid's tuition. Anything, the prices are going up more than 2%. I mean, it's an insult to people's intelligence that's the number that they use. Anyway, so I think there already are negative real interest rates in the United States. The little measly couple of basis points you get at a bank for putting your money in a bank, that doesn't keep up with inflation. So there already are negative real interest rates in the United States. I think they're going to get more negative, either with higher inflation or lower nominal rates. So I think that's baked into the cake, because that's going to support the U.S. government's debt, their ability to manage that debt. Lower interest rates makes it easier to manage that debt, and that debt is going nowhere. I mean, there is nowhere but north that the U.S. government's debt is going. It's politically impossible. So I think that's a pretty safe assumption, is we're going to continue to see that. Okay, so if we're going to see more and more negative interest rates, that means they're going to need to ramp up the war on cash, because they can't. Negative interest rates really aren't effective unless you trap people's money in the banking system. Well, you can't really trap people's money in the banking system as easily if you give them the option of having a bunch of cash stashed under their mattress. So I think we're going to see negative interest rates ramped up, and that necessarily means we're going to see the war on cash ramped up. And we already are seeing this. I mean, we're seeing, I think the head of the Harvard Business School or economics department, Kenneth Rogoff, he's a huge advocate for the war on cash. And he kind of he's a trendsetter, you know, obviously being a top academic at a top institution, he kind of sets the trends on this stuff. And I wonder what motivates this guy, because I don't think he's stupid. I think he knows what he's doing, but I mean, he is like a kind of person that wakes up in the morning and looks for ways to try to like restrict people's ability to use cash. I mean, I think the guy's I think he's clearly a sociopath. And unfortunately, this kind of thinking is gaining, this kind of wrong-headed thinking is gaining currency. So I think we'll see more of that.
And do you see political movements, as a last question here, do you see any political movements within, say, the U.S. to extreme socialism as a backlash, perhaps led by the millennial generation, that, you know, that could severely affect the economy or the financial markets even?
Oh, I think that's very likely. For better or worse, actually, probably for worse, these people are the future generation in the U.S. And well, who is one of the people that they idolize? Well, it's Bernie Sanders. And what there's a really interesting article that Bernie Sanders wrote about how Venezuela is the success story of socialism. Obviously, this was written a few years ago before their hyperinflation and major problems they have right now. So I encourage your listeners to check that out. Bernie Sanders basically wrote a glowing review of Venezuela and said, "Hey, we got to bring this to the U.S." Well, Bernie Sanders represents the economic views of these people. So yes, I think we are going to see a lot more of socialism, collectivism, and all the stuff that entails in the future, unfortunately.
Great. How can our listeners learn more about your work, Nick?
The easiest place to do that is on the International Man website. That's internationalman.com. We talk about all of these issues, and more importantly, how you can protect yourself and your family from these terrible things that we've been talking about today. So the situation is not hopeless. There are things you can do to not only protect yourself, but profit from the distortions that will inevitably be caused by all of these wrong-headed policies.
Great. Thank you very much for all the great points and insight, Nick. Thank you.
Yeah, thank you, Richard. Great to be with you.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.